This has not been an easy year for Wall Street or individual investors. The coronavirus pandemic has turned society upside down. It also sent markets to their steepest and fastest decline in history, only to see the market rebound over the past 4 months. However, there is one group of investors who aren't going to complain. They own physical gold or gold mining stocks. Gold has left the S&P 500 eating its dust in 2020. So, what is the probability this will continue? Well, we've looked at gold before and it's performing as expected. So, let's take another look at gold. Have you heard of TINA, TINA, or there is no alternative? Physical gold is climbing to the heavens because there is a narrowing list of options to generate guaranteed income. Bond yields around the world have plummeted, with some countries experiencing negative yields. At the same time, the Fed and other central banks around the world have injected huge amounts of capital into their financial systems. Since gold and the dollar have an inverse relationship, a further decline in the dollar likewise will boost gold. And it's simply supply and demand. For months, there have been sporadic gold bullion shortages. Regardless of the reasons, demand has been consistently outpacing supply, which places upward pressure on the price of gold. Gold is also viewed as a safe haven during heightened geopolitical risks. Although these risks have taken a back seat to coronavirus, we still have the U.S.-China trade dispute and other geopolitical risks like North and South Korea. The coronavirus pandemic has everyone on edge. We still don't fully understand everything there is to know about coronavirus, and we're already experiencing another wave of infections in a handful of states, with little certainty as to when a vaccine will be available, as well as when economic activity will return to any semblance of normalcy. Gold stands as the clear beneficiary. Looking at the history of gold, although spikes higher do happen in the gold market, it's far more common to see long bull market cycles. As this chart shows, gold has a multi-year base and began moving strongly upward in about 2019. Given how long the base period lasted, in my opinion, the bull market in gold has more to go. So let's take a look at our charts. And now we're looking at the monthly chart on the Spyder's Gold Trust, and the symbol is GLD. For disclosure purposes, I do not hold any shares of GLD at this time. From this point here in 2011, there was a spectacular, wonderfully magnificent base multi-year all the way through here up to the current level there. Now, if you subscribe to the cup and handle theory, hopefully there's going to be a handle created right here, which essentially would be a slight decline in the price with lower volume. So watch for that. And what you'll want to watch for is after the decline is the slight move on upward to this level here. Once it gets above that level, that's your trigger to buy. So let's go down here and take a look at some of the oscillators. Volume looks fine. A slight pickup here in the last couple of years. Nothing dramatic, but still that's favorable. And the MACD has been continuing on upward from that basing back here, and then the move up and through the zero line at that point there in early 2019, which we talked about probably all the way back then. Now, the level is at this point here, not quite to this level here. We may have a little bit further to go, but I would be looking for a little bit of pause. Now, it might not occur, but if you're looking to get into GLD, that's what you want to see. You want to see that pause, and then you want to see the slight contraction in the price on lower volume. Moving down here into the histogram, things look fine, as well as in the price rate of change and the relative strength. We're at a 90.45, which is very strong, but we can continue up here for a while. Now, going back, though, it's only been above that level a few times, say here in 2006, this 2007 into 2008, and then just briefly in 2011, again briefly in 2019, and then more strongly here in 2020. So the odds of a retracement, I think, are high just based on what we've seen here in the past. So if this comes back down here below that 80 level, that might signal an opportunity, but you're going to have to watch that very closely. Here in stochastics, the same thing is we've had a few periods where we've gone into that overbought territory, as you can see there in 2006, here's 2007, 2008. Now, we had an extended period from 2009 all the way through 2011. So that's what I'm looking for, is an extended period. Now, it did come back here, and that was perhaps a buy point at that point, and then continued on up. So I would look for another retracement of the stochastic and some of the other oscillators. Moving here into the Williams, much as what we've seen, nice basing all the way through here. And then I think that this is going to stay up for an extended period, but it's going to sawtooth. So just wait for that opportunity to buy when it comes down. Moving back up, one last look at the monthly chart. And let's go to the weekly chart to see if there is a contraction that maybe is on the horizon. And a quick look here at the 3-year weekly chart on GLD. If you're not in GLD, I would watch the price pattern as well as some of the oscillators, as I'll show you here. From this interim bottom there, we moved on up like that, but it hasn't been straight. It seems that gold, at least through the GLD trust, moves in these stair-step patterns, or it has been. So an up step, another step here, and another step here, and we're working on another one here, so hopefully we'll have that step completed. But when you look at the oscillators, it has the wave movement. Just as here in the Mac, you can see these waves up and down, and then up, and hopefully we're going to get another downward wave. Into the histogram, you can see the cycles there. Certainly in the price rate of change, moving all the way through here, you can see that we're in an upward move here. So I would wait for that to decline or contract a little bit before I'd step into GLD. You're going to have to go and take a look at the other ETFs or individual stocks to see what those cycles are, because they're not necessarily the same. But you can see the moves here, the waves moving on. Up, down, back up, down, up, and I would be looking for another move downward. It may take a few months or so. You can see that cycle there in the stochastics pretty clear, as well in the Williams. These moves are great for moving in and out of stocks if that's what you like to do. And it looks like we're in another upward pattern, so I would just simply wait for this to come back on down, back up here to the top. But as usual, study the fundamentals. And for today, that's ChewDog Charts. Thank you.